is it a person that I could go out for drinks after work and talk about life and, argue about politics without getting in a fight and, just have differences of opinions, but still remain respectful and enjoy the company of. And I think that's the most important when I talk to consultants and vendors.
Hey everyone, Chris G here, Hard Hat CEO. Today, not only do I like talking about real estate, I love talking about developing real estate, and that's a lot of fun too if you've ever done it. And for those guys with the big toys, I'm talking about the little bulldozers and stuff. They get in there and get it done. So today I have a guest all the way from Bellevue, Washington, and that is Eugene Gershom. Welcome, Eugene. How are you today?
Thank you, Chris. Thank you. I'm excellent. Pleasure to be here.
Tell us a little bit about what you do, if you
Well,
would.
I absolutely, yeah. So I develop mostly residential, single family, and multifamily real estate. And the way we position our company is we are not just a, straight, like plain developer that everybody knows. Our mission is to partner with folks who own the land to help them get their properties developed. So, unlike traditional developers, we don't actually buy real estate. We don't buy land. We partner with those who already have it and take them through the process.
Do a lot of your clients buy that land intentionally, or is something like maybe inherited, or did they buy it just because they could as an investment, didn't quite know what they were going to do with it at the time, or all
All of
the
the
above?
above.
Yeah,
Yeah, all of the above. The most common phone call I get is because somebody bought this real estate to develop it
hmm
and then quickly realized that it is more complicated than they thought.
sure.
Many times they stumble so they start, they hire, it's easy to hire people, right? It's easy to hire consultants, architects, engineers, contractors. Everybody figures, I'm going to just send out a bunch of RFPs, look at the proposals. I'm going to hire the best guy. Usually they hire the least expensive guy, which is not always the best thing. But then somebody advised them early on that don't worry about it. You'll just go to the bank, you get a loan, and construction loan, and you can get your building built. Well, they find out that it's not that simple. Banks simply don't want to loan them money. And a lot of times they need a lot more equity than they originally anticipated. And so, in most of the cases, my phone rings when somebody realizes that they're on their way to getting their building permit and they are not able to finance the deal. And so they call me and they ask me, how do we get it done? So then we get engaged and we sometimes restructure the team, sometimes keep the existing team in place, help them raise the necessary equity and figure out what I call financial engineering structure,
hmm
where we literally engineer each deal specifically to each transaction to that specific deal to see what's going to work for them financially.
Is it because I've owned multifamilies before, and some of the banks consider it more like a commercial loan? It's not a residential. It's not a multi. It's not a single family home. So they like want a little more equity down. That way you don't walk away. They're not as much of a risk. Is that type of avenue? Is that
There's so many variables,
yeah?
yes, and then some. In many cases, you could, so traditional banks, especially in this economy right now, they do require more equity
Sure.
uh, because things are uncertain. There are private lenders out there that would loan you more money, which means you need less equity. You will pay
Mhm.
more for that loan, but um, that could be the avenue for you.
Sure.
Now, commercial banks would most commercial banks would require personal guarantees. Private banks may not require personal guarantee. So there is a way to pay more money so you make less profit in the end, but you're personally not liable for what you're doing. There are like when you're acquiring an existing asset, there are
hmm
agency loans, basically government sponsored loans, if you will, that are fairly inexpensive, but they have a very high threshold of who they approve. They would need to have experience, track record, and they don't just loan money to everybody. So all of these little things in development, a lot of times we can come up with creative structures. Like I like describing our early townhome development, where we took a loan, construction loan for phase one of the project,
Hmm.
which it consists of four buildings, two fourplexes, two duplexes, and we got a loan to build the first fourplex. Well, what we also did is we included the cost of all of the site work and all of the concrete work for all four of the buildings
In
into
the
the
first
budget
one,
of the first one.
sure.
And so as we started building that first building, we were able to start prepping the site for the rest of the buildings, and we started pre-selling them. When the first building was pre-sold, I came to the bank and said, look, I know that the deal was that we need to finish this, but we already pre-sold everything. So can we just refinance and I get to do the whole thing. So that was the deal that we made there. Again, every situation is different, so it's like solving a
Sure.
new puzzle every time I look at a project.
When you look at a project, are you going in as a consultant or as a joint partner or both? It just depends on the call or the project.
So we call ourselves partners.
Hmm.
And the way we typically do it in the very beginning, we act almost like a consultant,
Sure.
very inexpensive consultant because we're not really making any profit. And the reason we do that is because when we first start looking at the job, we need to involve a lot of people. We need to involve a lot of consultants, our staff, and all of that costs money. And so that's
Hmm.
how we approach it. Look, all of that costs money. So that direct cost needs to be compensated. There's literally zero profit in it for us. The partnership component comes in when we actually get engaged to deliver the product, where our participation is recorded as a joint venture partnership. We take a small equity ownership that's back ended. We're literally the last ones to get paid. The all of the direct costs are paid out of the project budget, and we obviously help fundraise for it. But we're not making any profit until everybody else on that project, including the original owner, gets paid first. So that's our incentive to do well. That's the incentive that we communicate to the partners. That look, we are the only reason we're doing it is because we're hoping for that payout in the end.
And you started out as a family business, and that family business might still exist, but you've grown it and took a little arm of it, right? And kind of went out and started doing this development thing. How'd that work out?
Lots of ups and downs, lots of stress, sleepless nights, but it's working. So it's funny. My father started a construction company 30
Hmm.
some years ago, and growing up, I would visit him at the office. I would sit in meetings. Like I knew everything that was going on. I saw him super stressed out all the time. I saw all of the problems that he had to deal with in the field. Materials not being delayed, payments are being delayed. Uh, all sorts of issues that would come up, and I told myself, I don't want to be a builder. I don't want to be a contractor. This is not what I want to do. This is like too stressful. I'm not an engineer. I don't have this engineering mindset. So I went to business school, got my degree in economics, and started working in an investment firm.
Yeah.
And then I got bored doing that. So I went back, got my MBA, figured, while I'm still young, I could get my MBA. My last year of my MBA, my dad calls me. He's like, quit screwing around. I need some good people in the company. I'm like, okay, fine. And so that's how I joined the family business, because I was good with numbers. I was good with finance. I was not very excited about running retirement projections for old folks.
Right.
And so I joined the family business, but I still wasn't gravitating much towards construction. We eventually, a couple of years down the road, we bought a piece of property and we started looking at potentially developing it and maybe even building it ourselves. Well, and then the rest, as they say, is history. My
Yeah.
sister joined the company as well, and so the two of us were primarily involved in the development side, and then we officially liquidated or shut down our construction company a couple of years ago. So now we're solely focused on development and doubling down on this partnership model.
Awesome. Well, what talking about the partnership model, what kind of little red flags pop up every now and then that it kind of tells you where you're at or what when you turn something down or just things that you want to make sure you cover before you move forward.
Usually the projects sort of turn themselves down. And
I mean, from the
what I mean
financing? Yeah,
is, yeah, it's just something doesn't work about them.
gotcha.
So the way I look at it is when somebody presents a deal,
Hmm.
I, usually do a cursory review. And if on the surface, we call it within the company, we call it trying to kill the project. We throw all of the objections at it. Like, how are we going to kill this so that it doesn't happen? And if it passes the initial cursory review, meaning project is in a good location, market seems to make sense, prices are growing, construction costs are reasonable, we think we could make it work, let's proceed. Usually that goes through. In today's market, the hardest thing to pencil is the balance between construction costs and real estate values.
Hmm.
Construction costs are rising very rapidly, especially post COVID. Inflation is still there. A lot of materials are still escalating. There's a lot of uncertainty about the tariffs and what's going to happen with construction materials. Construction costs is not coming down. Subcontractor profits are being squeezed, yes, but construction costs are not coming down. So that is the biggest variable. And rental rates, especially in our area here in Seattle, rental rates haven't gone up enough to justify new construction. Uh, right now, single family and condominiums are not selling very well due to mortgage rates and everything else. So that is really the biggest variable today that doesn't allow projects to go forward. And then a lot of times, owners, when they call me to look at the project, I say, look, I really need to do the feasibility study. And on a medium sized project, that could easily be $25,000. And they get jittery. They're not certain about that expense. They think that it's some sort of an upfront fee that I'm going to take and run and never deliver the result. And so that's another thing that kills projects in my book, is when the owner doesn't want to actually make that next step, or if the balance between costs is not there.
How do you do that research? I mean, you have people that do that for you, experts, or you just use the internet a lot. I mean, I'm sure you probably don't do it yourself. You probably review them, but how's that? You mentioned earlier you had some other state projects going on. I would say that's even harder. I would think you don't live there. How's that work for you?
It's complicated. We put together this feasibility study checklist. It's actually on our website. It's a free download. Anybody can go to jscompanies.co, download the feasibility study checklist, and if they wanted to do that work on their own, they could just literally go and check off the box. But that's the manual that we follow. Essentially, what it comes down to is validating all of the assumptions. If the owner comes in and says, "Oh, I can build 20 houses here for $50,000 a piece," okay. I mean, I don't care if that's what you say. Prove it to me,
Right.
and if it's doable, then sure, why not? Uh, so we have to validate all the assumptions. If that's the assumption they're putting in, show me. Then we look at call up a few contractors and get conceptual estimates for this is what we're thinking. What is the range? We usually engage a designer, architect, or engineer to lay out the homes if it's single family, or if it's a multifamily, to kind of lay out the building very super conceptually, just to get an idea. And a lot of times, especially in urban projects, we would engage like an appraisal firm from a large real estate company. Like recently, we worked with JLL. There's others like CBREs, Colliers, and all those big guys that have their appraisal teams that could help us evaluating the rental rates, looking at the competition, what's coming into the market. So we'll look at all of that. And ultimately, what it all comes down to, all of that research, is we build a conceptual pro forma. And while I have a lot of consultants and staff and helpers gather all the information, I typically spend the most time working with a pro forma myself. And the reason there's plenty of consultants that I could outsource that to, but the reason I do that is because I feel like I need to know the numbers. When I talk to the owner, when I talk to the lender, when I talk to investors in the future, they start asking me all these questions and they all expect answers on the fly.
Sure.
And if somebody else runs the numbers for me, I would not have them in my head. I would have to say, "Excuse me, let me look it up. Let me see. Well, if we do this, then it's that." But when I run the numbers and when I spend 4, 5, sometimes 16 hours playing with that model, that's when I know it. And that's when I can have a conversation with it. You wake me up in the morning, start asking questions about the numbers, I'll know the answers.
You do a
So
lot of if then thoughts, like if this happened, then this happens, and you kind of play the gamut as far as what can happen.
to a certain degree, yes. So every model of ours includes a sensitivity analysis where we have like 5 or 6 major variables, like what happens if the interest rates go up or down? What happens when the prices go up or down? What happens when construction costs go up and down? And so we have all of these variations of what the end result is going to be when those parameters change. But also when we're just running the model, we're trying to see, well, what is that perfect mix of the product that would work well? Like this one client that called us with a project recently proposed a build to rent development on one side of their parcel and then a subdivision on another side. And when I asked, well, why rental here, subdivision there, the answer was something along the lines of, I don't know, it seemed right. And so when we do the model, we run multiple different scenarios. Let's run this whole thing as a build to rent. Let's run this whole thing as a for sale. Let's see what combination makes sense. And then I engage usually an architect and say, how many units can we build here? Run through this plan and maximize it. And right now, I'm also playing around a lot when you ask about tools, playing around a lot with AI tools. I was just recently looking at the one that you can feed in all the information, and it has connections to all of the municipal codes and county codes. So it tells you what the restrictions are, but then it would also uh, allow you to model the overall massing of one building or multiple buildings on the site. So that would come in very handy. We haven't officially deployed a tool like that, but we've been doing a lot of research on them.
When oh, my grandson's got the phone ringing in the background. I lost my track. When I talk to my clients about money trees or assets, basically, and to find ways to improve and keep their people busy, but build more assets for them. So, do they, in your case, if I said, go out and find a project, and would it be advantageous to find somebody like yourself to be the partnership? Like you're the consultant for the home landowner, and do you have agreements with other contractors that they could be part owner as well and share some of the expense?
Absolutely. We're generally very open with contractors and other consultants if they also want to play in the equity pool of the project.
Hmm.
The way I generally think about it is the more team players are actually vested in the project, the more motivated they are. And so if a contractor comes in and says, I want to convert some of my profit, some of my fee into equity, by all means.
Sure.
I would much rather them do that. So yes, over here in the Seattle area, we have so many contractors that we know, and because we used to be the GC here as well, we have lots of relationships with subcontractors
Hmm.
as well. But going into a new market, we call around, ask for
Depends. Yeah.
referrals,
Make sure. Yeah.
and my I've been doing this long enough that I know now that when I pick a consultant or contractor to work with,
Hmm.
I care less about the numbers. I care about communication. I
Sure.
care about how I feel about it. Is it a person that I could go out for drinks after work and talk about life and argue about politics without getting in a fight and just have differences of opinions but still remain respectful and enjoy the company of. And I think that's the most important when I talk to consultants and vendors.
Now, when you took over or expanded your business and went to this arm of it, and your sister joined and so forth. Y'all grew pretty fast. Is that right?
Fairly fast. Yeah, I mean, we didn't really have time to ramp up. We grew up fast. We've had lots of projects. We culminated in like almost $120 million worth of projects going on at the same time. Then we contracted fairly rapidly after that as well. So
Now, in my notes here, it said you had to scale back a little bit because of the economy, I assume, and the that little thing, the little bug that was going around, and so for COVID. What was that like?
it was painful. I mean, as I said, we grew up fast. COVID, we went through COVID just fine. We actually had
Right.
3 projects under construction during that time.
Mhm.
And we thought that we weathered that storm fairly well. What we didn't realize at the time is the impact that it would make on our business afterwards, like 2 years later.
Like
That's when
inflation or
inflation and interest rates.
yeah,
Yeah,
gotcha.
those two almost killed us, to be
Mhm.
honest. And that was hard. We lost 2 of our projects at the time, and it was painful.
Sure.
That's when we made a decision that we need to step away from construction and focus on development. Construction is fun. Construction is great, but it adds so much more risk that a lot of younger developers don't necessarily realize.
Mhm.
It seems like you could capture all that margin by self-performing the work. What you're not realizing is that, well, in my case, what I didn't realize is how much time it took for me to manage construction. I mean, it would take 98% of my time managing construction issues. And it didn't matter how many people I had employed in the construction company. Every time something major happens, and in construction, something major happens every other day, I would get a phone call, and I would have to be in meetings, and I would have to solve personnel issues, and I would have to solve material supply issues, and coordination between the architects and engineers and the contractors that were always fighting each other. And it was just taking so much time. And then responsibility to the city and performance bonds to the city that we would have to place in order to, do the work in the right of way. All those things, they just added so much friction and so much pressure that yeah, it was really painful. Now that I'm focused strictly on construction, or sorry, on development, I decided that I would rather allow contractors, and I have a ton of respect for them after having done this myself, to make their profit, to make their margins, and but help me take part of that risk, construction risk, because that's what they do every day.
In your opinion, so joint ventures in real estate, what makes them so powerful? Uh, as far as you went that road, what's the advantages? You
The
think it's less
biggest
risk? Go ahead.
the biggest advantage is well, so the advantage to me is the is it gives me an ability to work on multiple different projects that are already somewhat underway. So it
Mhm.
allows me to skip the site acquisition portion of real estate development. So I don't need to
Okay.
run a multiple different feasibility scenarios, feasibility studies on projects that I'm not going to buy. So it allows us to, skip a step. The advantage to the property owner is that they get all the benefit of having a consultant on board who knows what they're doing
Mhm.
without paying all of the consultant profits and markups. Because if they were to just hire, I mean, there's plenty of owners reps and development consultants out there that you could hire to basically do the same thing that we do for a fee. They will bill by the hour. They'll show up to meetings. They'll do all the same work, and when the job is done, they're going to walk away. They don't have any vested interest in the project, and of course, they're going to tell you that they do because that's their business and they want you to be
Sure.
happy and all of that. But on paper, financially, they're not because they're being paid for their time. They are
Right.
in business of selling time. And I a few years ago decided that it's funny. We even used to have our rate sheet, hourly rate sheet, attached to our feasibility studies and various different contracts. And recently, I said, I don't believe in rate sheets anymore. I am not in business of selling time. I am in business of delivering a product, and that's what it costs. So even our development fee is not based on time that it takes us to do the work. It's based on a fixed dollar amount. It's usually correlated to the overall size and value of the project. But ultimately, it's the product that we're delivering, and we're not profiting unless the product or project is successful.
Let's say a couple years down the road, you're still part of the partnership, and you're collecting whatever it is you collect. Are you all part of the selling process too? The original owner, the one you're partnered with, they're ready to go. Do you ever buy them out, or you just go help them get it sold, or whatever?
Every deal is different. So a
Yeah.
lot of times our partners, original owner partners, they want to remain as a general partner, so as a senior partner, and
Hmm.
they call the shots. In a recent project that we're working on right now, the property owner came in and said, it was almost caught me by surprise because I didn't expect that from that group. But we're negotiating the letter of intent. It wasn't even the contract yet. It was just a letter of intent to do the feasibility study. And they
Hmm.
made a point, they called a meeting specifically to say, look, we just want you to understand, we are not going to be the general partner on this. You're the developer. You can be the general partner. We just want to be the passive investor. We'll, hold, whatever the value of our ownership is, but we're working with you because we don't want to be involved. And so in that case,
Okay.
there's still a vote, right? At the end of the
Sure.
day, there's still a vote and they have a say, but they let us call the shots on a day-to-day basis. So every deal is different. I like telling owners that I would love to educate them and they can sit in every meeting, they could review every document if they want to, or if they just want to sit back and call me every once in a while. I can send a monthly report, I can send an annual report, or I can talk to you every other day if you want to. But it all depends on what the owner wants to do.
So for any of my listeners, contractors wanting to get into development, what kind of advice could you give them?
What kind of what?
Advice?
Oh, advice. I think the main advice is to not skip on early feasibility study. The most important thing is to evaluate what this market is. And if somebody tells you this is a no brainer, that's usually a red flag for me. Uh, Everything is complicated, everything has issues. So do your due diligence. When it comes to soil studies, when it comes to surveys, when it comes to environmental issues, construction costs, and market absorption. All of those things are extremely important. And just because the market's been doing well for the last 20 years doesn't mean it's going to continue to be doing well. So it is extremely important to weigh in all those issues. And a lot of times, if a client calls you and says, hey, I want to hire you to do something, it's really important to understand what that person's motivation is. Are they truly looking to build a partnership, to build a relationship, or are they just looking to make a quick buck and disappear? And so we do almost as much research on the people and the companies that we're working with as on the project itself.
Thank you, Eugene. If you're interested in getting into some real estate development, contact Eugene. His information will be in the show notes. And if you're interested in talking about something else, like how your business can want to become a CEO of your business so that you can have that extra cash to invest with Eugene, give me a call. My information is down in the show notes. And as always, join my Facebook group, Hard Hat the CEO, where you get daily inspiration and can contact with other vendor or contractors like yourself. Eugene, thank you for today. It's been enjoyable for sure.
Thank you, Chris. It's been a pleasure.
All right.